Welcome to TechGolly Weekend News.
This week's top news headlines.
Microsoft blames Apple for delayed launch of Xbox mobile store amid legal battle. Johnny Ive teams up with OpenAI to design next-gen AI hardware, challenging Apple's dominance. AT&T to acquire Lumen's consumer fiber business for $5.75 billion, doubling fiber reach by 2030. Android 16 to bring desktop-style interface with external display support. U.S. tariffs squeeze Japan's auto suppliers as Kyowa Industrial struggles to diversify. Operation Endgame. Global authorities dismantle 300 malware servers in major cybercrime crackdown. Elon Musk's AI tool Grok raises alarms over federal data use and privacy risks. Apple faces fresh tariff threat from Trump despite global diversification efforts. Pfizer stock struggles amid setbacks, but is it a hidden opportunity? NVIDIA plans lower-cost AI chip for China to navigate U.S. export curbs.
Microsoft has pointed to Apple's restrictive App Store policies as the main reason behind the delayed launch of its much-anticipated Xbox mobile web store, originally set for July 2024. This revelation came through an amicus brief filed late Tuesday by Microsoft to support Epic Games' ongoing legal dispute with Apple over its control of the App Store and in-app payment systems. Microsoft had been planning to roll out an online mobile store where users could purchase in-game items outside of Apple's App Store ecosystem. However, Apple's anti-steering policies, which prohibit apps from directing users to alternative payment methods, effectively blocked Microsoft from moving forward despite a district court ruling that should have allowed such features. According to Microsoft's filing, Apple's restrictions prevented the company from informing users that alternative payment options exist. This solution has been stymied by Apple, Microsoft stated, noting that even minimal progress was hindered by increased economic and operational costs imposed by Apple. The court's ruling in Epic's favor temporarily allows third-party developers to link to external payment systems within their apps. This legal shift enabled Fortnite's return to the App Store, complete with Epic's payment links, and theoretically opened the door for Microsoft's Xbox Store to do the same. Still, Microsoft remains cautious. It fears that if Apple's appeal against the ruling succeeds, it could be forced to pull back the Xbox mobile store after launch. Microsoft argues that Apple can easily reverse its changes if it wins the appeal, and thus urges the courts to enforce the injunction in the meantime. Apple's App Store policies have also affected the main Xbox app on iOS, which cannot offer both game purchases and cloud streaming due to restrictions. Microsoft recently allowed purchases within the app, but had to remove remote play capabilities to comply with Apple's rules. Meanwhile, the Android version of the Xbox app was set to launch full purchasing and gameplay features in November 2024. That rollout, too, has been stalled by what Microsoft calls a temporary administrative stay.
Johnny Ive, the iconic designer behind Apple's most famous products, is re-entering the tech world in a major way. On Wednesday, Ive announced a $6.4 billion merger between his new hardware firm, I.O., and OpenAI, marking a major move into the AI-powered hardware space. Ive will lead the design of a new class of AI devices, signaling a shift that could challenge the very products he once helped create at Apple. The partnership highlights Silicon Valley's growing belief that artificial intelligence assistants could reshape the future of consumer electronics, eventually replacing smartphones and laptops with entirely new types of devices. OpenAI CEO Sam Altman confirmed the goal is to build a new generation of AI-powered computers. Industry analysts are calling this a generational shift. Apple analyst Gene Munster noted that tech revolutions like the internet and smartphones happen rarely, and AI is the next major wave. Even Apple executive Eddie Q admitted AI devices might replace the iPhone within a decade. Apple, meanwhile, is struggling to keep pace. Its Apple Intelligence features were delayed, and Siri still lacks the conversational ability of ChatGPT or Google Gemini. Apple is expected to showcase updates at its WWDC conference on June 9th, but it now faces new pressure from its former design guru. Ive, who continues to run his design firm Lovefrom, is bringing key Apple veterans along for the ride, including Scott Cannon, Tang Tan, and Evans Hankey. Their expertise could give OpenAI the edge in developing consumer-friendly hardware. Despite several AI hardware attempts, such as Humane's wearable pen and Rabbit R1 flopping the market, I was blunt, calling them bad products. However, Meta's smart glasses and Google's Android XR platform are showing early promise. With OpenAI, Ive now has the backing to create sleek, user-friendly AI hardware that could redefine personal computing and challenge Apple's place at the top.
AT&T Incorporated has agreed to purchase Lumen Technologies Incorporated's consumer fiber division for $5.75 billion in cash, marking a strategic expansion of its high-speed broadband network. The deal, announced Wednesday, will boost AT&T's presence in urban areas such as Denver and Las Vegas and is expected to close in the first half of 2025, pending regulatory approval. This acquisition is a significant step toward AT&T's long-term goal of expanding its fiber optic infrastructure to reach 60 million locations by 2030, a figure nearly doubling its current footprint. The move is part of a broader industry trend in which telecom giants are racing to upgrade and expand fiber networks across the U.S. Lumen, serving residential and enterprise customers, had been shifting its focus away from consumer services. It currently serves 1 million residential fiber customers and covers over 4 million homes and businesses across 11 U.S. states. AT&T will form a new subsidiary to manage the acquired assets and plans to bring in an equity partner within 6 to 12 months of the transaction's completion to co-invest and scale the business further. This structure mirrors AT&T's 2022 partnership with BlackRock, which resulted in the formation of Gigapower LLC. Gigapower LLC aims to accelerate fiber build-outs outside of AT&T's traditional landline service areas. Lumen's stock surged 17% in pre-market trading, reflecting positive investor sentiment, while AT&T's shares remained steady. The deal highlights the intensifying competition in the telecom space as companies position themselves for the next wave of broadband growth. In parallel, major telecom consolidations continue to reshape the industry. The FCC recently approved Verizon's acquisition of Frontier Communications, and Charter Communications announced a $34.5 billion merger with Cox Communications, making it the largest broadband provider in the U.S.
Google is introducing a significant new feature in Android 16 that allows smartphones and tablets to run a desktop-style interface when connected to an external display. This functionality, first hinted at in early betas, was officially confirmed during the company's I/O 2025 developer keynote, developed in collaboration with Samsung. The feature built on a groundwork laid by Samsung DeX, which allowed certain Samsung devices to simulate a desktop interface via an external monitor. With Android 16, Google is standardizing and integrating this capability into the core operating system. The new interface features resizable app windows, a desktop-like dock for frequently used apps, and an overall layout optimized for productivity on larger screens. Google says the system is aimed at both phones and tablets and emphasizes the need for adaptive apps that adjust seamlessly between mobile and desktop environments. While Android 16 introduces official support for desktop windowing, its effectiveness will still depend on device manufacturers enabling it and app developers optimizing their software for resizable windows. This evolution signals Google's ongoing commitment to multi-device continuity and enhancing the productivity capabilities of Android-powered hardware. Currently, the developer beta of Android 16 is available for select devices, with a public release expected in June. Users with compatible phones and tablets will soon experience this new feature firsthand, assuming OEMs like Samsung, Google, and others implement it in their firmware. This upgrade comes amid a broader showcase of innovations at Google I/O 2025, including tools like Flow, an AI movie generator, real-time translation in Google Meet, virtual clothing try-ons, and new AI features for Project Astra. These updates collectively highlight Google's push toward AI integration and cross-device experiences.
Japan's auto parts industry is once again under pressure from U.S. trade policies, with sweeping tariffs introduced under the Trump administration shaking its foundations. Among the affected firms is Kyowa Industrial, a 78-year-old parts manufacturer led by Hiroko Suzuki, who now faces an uphill battle to diversify into medical devices amid intensifying trade barriers. The U.S. imposed 25% tariffs on automobiles and broader tariffs on Japanese goods, marking a critical threat to the nation's fourth-largest economy. Prime Minister Shigeru Ishiba labeled the situation a national crisis. Japan's top trade negotiator, Ryosei Akazawa, is in Washington for further talks. Kyowa, based in Takasaki, has long been part of Japan's vast automotive supply chain. The company doesn't export auto parts to the U.S., but Suzuki fears automakers will demand lower prices from suppliers to offset the impact of tariffs. She began diversifying into neurosurgery instruments in 2016, foreseeing the decline in demand for combustion engine components. However, U.S. tariffs also target medical devices, complicating this pivot. Suzuki's experience reflects Japan's broader struggle. Once a global leader in electronics, the nation is now deeply reliant on its auto industry, a rapidly disrupted sector by Chinese EV makers like BYD and tech-centric brands such as Tesla. Japanese automakers, including Toyota, Nissan, and Subaru, have offered limited support to their suppliers, focusing mainly on cost containment. Industry insiders and officials warn that the tariff threat may accelerate consolidation among smaller manufacturers. Some, like Toa Kogyo, fear the cost burden will ultimately fall on suppliers, carmakers, dealers, and consumers. Subaru has already raised prices on several US models. Despite the uncertainty, Suzuki remains hopeful. She recalls her deep ties to the US and urges both nations to resolve their trade tensions. She's now eyeing new markets in Singapore and Hong Kong, seeking stability outside the American sphere.
In a major international cybercrime crackdown, authorities from Europe, the US, and Canada have dismantled more than 300 servers and issued international arrest warrants for 20 individuals linked to a sophisticated malware operation. The coordinated effort, named Operation Endgame, was revealed in a statement by Eurojust, the European Union Agency for Criminal Justice Cooperation. The operation targeted some of the most dangerous malware variants on the internet, particularly those used for initial access. This form of malware stealthily infiltrates systems and paves the way for further attacks like ransomware. These types of malware are especially insidious, as they often go undetected while establishing backdoor access to systems. Authorities from Germany, France, the Netherlands, Denmark, the United Kingdom, the United States, and Canada collaborated. Together, they identified more than 36 suspects, formally charged 20 individuals, and neutralized 650 domains used to host or distribute malware. Law enforcement also seized 3.5 million euros in cryptocurrency, bringing the total seizure from the broader 2024 operation to over 21.2 million euros. The latest actions build upon the May 2024 takedown of major botnets, which was previously the largest operation of its kind. Operation Endgame is part of an ongoing campaign, with follow-up actions expected in the coming months. Authorities have also launched public appeals to help capture key figures behind the malware networks. This Friday, German authorities are expected to list 18 top suspects on the EU's most wanted list. A dedicated website for Operation Endgame is now live, providing updates and additional information on the crackdown. This sweeping action represents a significant step in the global fight against cybercrime, as governments intensify efforts to curb the spread of ransomware and hacking infrastructure targeting businesses, institutions, and individuals worldwide.
Billionaire Elon Musk's AI chatbot Grok is reportedly being used within the US federal government by his Department of Government Efficiency team to analyze government data. According to sources familiar with the matter, this move may violate conflict of interest laws and threaten the security of sensitive citizen information. 3 individuals with knowledge of Doge's activities revealed that a customized version of Grok is being used to ask questions, prepare reports, and analyze data. 2 sources added that Doge staff encouraged officials at the Department of Homeland Security to use Grok, despite its lack of official approval. Grok was developed by xAI, a Musk-owned venture, and may give Musk access to non-public federal data, potentially benefiting his private companies like Tesla and SpaceX. Ethics experts say this could create an unfair competitive advantage and raise serious privacy concerns, especially if Grok is trained in using sensitive government information. Musk, the White House, and xAI did not respond to requests for comment. DHS denied that Doge pressured staff to use Grok. Still, privacy advocates fear Doge's access to protected databases could lead to data leakage, misuse, or surveillance. Doge has previously overseen mass federal layoffs and data centralization efforts. Now, sources report the team is attempting to use AI tools, including Grok, to flag federal employees who are not loyal to former President Trump's political agenda, potentially violating civil service laws. The Doge initiative is reportedly led by Kyle Schutt and Edward Coreystein, a 19-year-old known online as Big Balls. Meanwhile, some Department of Defense employees were recently told that AI tools monitored their computer activity, although the Pentagon denies Doge's involvement in surveillance operations. Experts say if Musk personally directed Grok's federal use, it may breach criminal conflict of interest laws. Even if he didn't, the situation still creates a troubling appearance of self-dealing, calling for immediate oversight.
Apple Incorporated is facing renewed pressure from former President Donald Trump, who threatened to impose a 25% tariff on iPhones not made in the United States. The warning, posted on Truth Social, sent Apple's market value plunging by over $100 billion early Friday, underscoring the vulnerability of its global supply chain strategy. Despite Apple's efforts to reduce dependence on China by expanding manufacturing in India and Vietnam, the majority of iPhone production, about 85%, still comes from China. Apple CEO Tim Cook has been gradually diversifying operations, especially since Trump first imposed tariffs on Chinese imports during his first term. India, in particular, has ramped up output, exporting a record $2 billion worth of iPhones to the U.S. in March. Cook recently noted that most iPhones sold in the U.S. will soon be made in India, while iPads, Macs, Apple Watches, and AirPods will primarily originate from Vietnam. China will remain the main source for products sold outside the U.S. To further strengthen domestic ties, Apple announced a $500 billion U.S. investment plan over 4 years, including hiring 20,000 employees and building a server factory in Texas. Cook emphasized the company's commitment to American innovation, but Friday's developments highlight how these efforts may fall short of shielding Apple from political risk. Apple has already forecast a $900 million hit this quarter due to tariffs, and analysts warn that a full shift to U.S. manufacturing will be both impractical and costly. Wedbush analyst Dan Ives estimated that a domestically made iPhone could cost around $3,500, making it economically unfeasible. Trump's latest remarks also included a recommendation for a 50% tariff on European Union goods and a broader push for tech firms to relocate manufacturing to the U.S., which will impact companies like Samsung.
Pfizer, once hailed for its pandemic-era success with Comirnaty and Paxlovid, has seen its stock tumble more than 60% from its highs. While those COVID-related revenues are now a thing of the past, Pfizer is grappling with many new challenges that continue to weigh on its performance. Most recently, Pfizer discontinued the development of danuglipron, a promising weight loss pill, after safety concerns regarding liver toxicity emerged. This setback dashes the company's hopes of tapping into the booming obesity drug market. Political and regulatory headwinds compound the pressure. Health Secretary Robert F. Kennedy Jr. has criticized the pharmaceutical industry, and former President Trump issued an executive order targeting lower drug prices. Additionally, Medicare reforms tied to the Inflation Reduction Act are expected to shave $1 billion off Pfizer's 2025 revenues. Trade tariffs could further complicate global manufacturing strategies. Despite these blows, analysts suggest that Pfizer's issues may be more akin to paper cuts than fatal injuries. The company maintains a robust drug pipeline, especially in oncology, and has initiated a cost-cutting strategy to save $7.7 billion by 2027. Pfizer also boasts investment-grade credit and a manageable 61% dividend payout ratio based on 2025 earnings guidance. The stock trades less than 8 times its projected 2025 earnings, contrasting with the S&P 500's P/E ratio 28. This low valuation implies that market expectations are already quite pessimistic. For investors, this could create a unique opportunity. With a 7.3% dividend yield and modest earnings growth of 3 to 5%, Pfizer could deliver annual returns exceeding 10 to 12%. If the company exceeds growth expectations or sees a valuation rebound, investors could enjoy an even greater upside. While risks remain, Pfizer's discounted valuation, stable financials, and high yield make it a standout candidate in today's pricey stock market.
NVIDIA is preparing to launch a new AI chip specifically designed for the Chinese market. It aims to regain lost ground after U.S. export restrictions severely limited its ability to sell high-performance processors in the region. Based on NVIDIA's latest Blackwell architecture, the new chip is expected to be priced between $6,500 and $8,000, significantly lower than the $10,000 to $12,000 price tag of the now-restricted H20 model. This new GPU, likely named the RTX Pro 6000D or B40, will use GDDR7 memory rather than high-bandwidth memory and will not include advanced packaging technology like Taiwan's semiconductor manufacturing company SKOS. While less powerful than the H20, the chip is designed to remain within the memory bandwidth limits imposed by recent U.S. export controls. The chip is expected to achieve around 1.7 terabytes per second of memory bandwidth, just under the 1.8 terabytes per second limit set by regulators. According to sources, mass production of the new chip could begin as early as June, and another China-specific Blackwell chip could possibly enter production by September. NVIDIA has been forced to pivot its China strategy multiple times. Previously, the H20 chip, based on the older Hopper architecture, was modified for export but eventually banned. These restrictions led to a $5.5 billion inventory write-off and caused NVIDIA to abandon an estimated $15 billion in sales opportunities. China accounted for 13% of NVIDIA's total revenue last year, but its market share in the country has declined from 95% in 2022 to about 50% today. With its Ascend 9 10B chip, domestic competitors like Huawei are gaining traction, especially as NVIDIA's access to the Chinese market remains uncertain. NVIDIA CEO Jensen Huang has warned that ongoing export limits could accelerate Huawei's dominance in China's AI chip sector.